to finance. Understanding finance. Recording in progress. Finance is essentially about the management of money. It involves activities such as saving, borrowing, investing, budgeting, and forecasting. Finance plays a critical role in both personal lives and the functioning of businesses. It helps individuals and organizations make informed decisions about how to allocate their resources to maximize efficiency and profitability. Key concepts in finance. 1. Income and expenditure. The foundation of personal finance involves understanding income and expenses. Income is the money received, typically earned from work, investments, or business operations. Expenses are the costs incurred to live and operate. Managing the balance between income and expenses is crucial for financial stability. 2. Saving. This refers to the money set aside for future use rather than spent immediately. Savings can help cover future expenses, emergencies, or retirement. Financial stability often depends on the ability to save effectively. 3. Investing. Investment involves committing money to an endeavor with the expectation of achieving a profit. This can include purchasing stocks, bonds, real estate, or other assets. The aim is to make your money grow over time. 4. Budgeting. Budgeting is the process of creating a plan to spend your money. This spending plan ensures that you will always have enough money for necessary expenses and goals. It also helps avoid spending more than you earn. 5. Credit. Understanding credit involves knowing how to borrow money responsibly. Credit can be a powerful financial tool if used wisely. It involves receiving money, goods, or services now in exchange for a promise to pay later. Overview of financial markets. Introduction. Financial markets are essential components of any economy, facilitating the allocation of resources, the transfer of risk, and the flow of capital. Understanding their structure, functions, and the roles of various participants is crucial for anyone involved in finance. This section provides a comprehensive overview of financial markets, their types, functions, and the roles they play in the economy, with specific examples related to Ghana. Definition and purpose of financial markets. Definition. Financial markets are platforms or environments where financial instruments such as stocks, bonds, currencies, and derivatives are traded. These markets provide a structured setting for buyers and sellers to engage in transactions involving these instruments. Purpose. The primary purpose of financial markets is to facilitate the efficient allocation of resources. They help in 1. Raising capital, enabling companies and governments to raise funds by issuing securities. 2. Liquidity provision, allowing investors to buy and sell securities easily. 3. Price discovery, establishing market prices for financial instruments through supply and demand interactions. 4. Risk management, enabling the transfer and diversification of risk through various financial instruments. Example, Ghana. Ghana Stock Exchange, GSE. The GSE is the main stock exchange in Ghana, where shares of publicly listed companies are traded. It plays a crucial role in the Ghanaian financial market by providing a platform for raising capital and offering investment opportunities. Primary versus secondary markets. Primary market. The primary market is where new securities are issued and sold for the first time. It is crucial for capital formation, as it enables issuers, companies and governments, to raise new funds directly from investors. Initial public offerings, IPOs. Companies go public by issuing shares for the first time. Government bonds, governments issue bonds to finance public projects. Example, Ghana. MTN Ghana IPO. MTN Ghana launched its IPO on the GSE in 2018, raising funds to expand its operations and services. This was one of the largest IPOs in Ghana, attracting a significant number of retail and institutional investors. Secondary market. The secondary market is where existing securities are traded among investors. It provides liquidity, enabling investors to buy and sell securities easily. Stock exchanges, platforms like the New York Stock Exchange, NYSE, or the Ghana Stock Exchange, GSE, facilitate these trades. Example, Ghana. Trading on the GSE. After the IPO, MTN Ghana's shares are traded on the GSE, allowing investors to buy and sell shares in the company. The secondary market ensures that investors can liquidate their investments when needed. Functions of financial markets. 1. Capital formation. Financial markets enable the efficient raising of funds by businesses and governments. This capital can be used for expansion, innovation, infrastructure projects, and other productive purposes. Example, Ghana. Infrastructure bonds. The government of Ghana issues infrastructure bonds to raise capital for public projects such as road construction, energy development, and water supply systems. These bonds provide the necessary funds to enhance the country's infrastructure, promoting economic growth. 2. Liquidity provision. Financial markets provide liquidity by enabling investors to buy and sell securities quickly and easily. This liquidity is crucial for investor confidence and market stability. Example, Ghana. GSE liquidity. The Ghana Stock Exchange provides liquidity for investors, ensuring that they can trade shares of companies like Ecobank Ghana and Ghana Commercial Bank without significant price changes due to market depth. 3. Price discovery. The interactions of buyers and sellers in financial markets help establish the prices of financial instruments. This process of price discovery reflects the collective assessment of the value of these instruments based on available information. Example, Ghana. Share prices on the GSE. The price of shares listed on the GSE, such as those of Fan Milk Limited, is determined by market participants based on factors like company performance, industry trends, and economic conditions. This helps investors make informed decisions. 4. Risk management. Financial markets offer various instruments, such as derivatives, that help investors manage and transfer risk. These instruments can be used for hedging and diversifying investment portfolios. Example, Ghana. Agricultural derivatives. Farmers in Ghana can use derivatives to hedge against price fluctuations in commodities like cocoa and maize. This helps stabilize their income and manage the risks associated with agricultural production. Types of financial markets. 1. Stock markets. Stock markets facilitate the buying and selling of shares of publicly traded companies. They are vital for capital formation and provide a platform for investors to invest in companies and for companies to raise equity capital. Example, Ghana. Ghana Stock Exchange, GSE. The GSE lists companies such as Anglo Gold Ashanti, Total Petroleum Ghana, and Ghana Oil Company Limited. It provides a marketplace for trading their shares, helping companies raise capital and investors gain ownership in these firms. 2. Bond markets. Bond markets involve the issuance and trading of debt securities. They are essential for raising long-term capital for governments and corporations. Example, Ghana. Government bonds. The government of Ghana issues treasury bonds and notes to finance public projects and manage national debt. These bonds are traded on the secondary market, providing investors with a relatively safe investment option. 3. Forex markets. Forex, foreign exchange, markets are where currencies are traded. They are critical for international trade and investment. Example, Ghana. Cedi exchange rate. The Bank of Ghana manages the exchange rate of the Ghanaian cedi against other currencies, influencing trade and investment flows. Forex markets help businesses and individuals exchange currencies for international transactions. 4. Commodity markets. Commodity markets trade raw or primary products such as metals, energy, and agricultural products. Example, Ghana. Cocoa trading. Ghana, being one of the largest producers of cocoa, actively participates in the global commodity markets for trading cocoa. The Ghana Cocoa Board oversees the marketing and export of cocoa, ensuring fair prices for farmers and stable income for the country. Roles of various market participants. 1. Retail and institutional investors. Retail investors, individual investors who buy and sell securities for personal accounts. Institutional investors, organizations such as pension funds, mutual funds, and insurance companies that invest large sums of money. Example, Ghana. SNIT, the Social Security and National Insurance Trust, SNIT, is a significant institutional investor in Ghana, managing retirement funds and investing in various financial instruments to ensure long-term returns for its beneficiaries. 2. Brokers and dealers. Brokers act as intermediaries between buyers and sellers, earning commissions on transactions. Dealers buy and sell securities for their own accounts, making profits on the spread between buy and sell prices. Example, Ghana. Brokerage firms. Firms like DataBank Brokerage Limited and IC Securities provide brokerage services to investors in Ghana, facilitating the buying and selling of securities on the Ghana Stock Exchange. 3. Investment banks. Investment banks assist companies in raising capital through underwriting and issuing new securities. They also provide advisory services for mergers, acquisitions, and other financial strategies. Example, Ghana. IC Securities, an investment bank in Ghana that provides a range of services, including corporate finance, mergers and acquisitions, and investment advisory. They help companies raise capital and navigate complex financial transactions. 4. Regulatory bodies. Regulatory bodies ensure market integrity, transparency, and protect investors. They establish and enforce rules governing financial markets. Example, Ghana. Securities and Exchange Commission, SEC, Ghana. The SEC regulates the securities industry to protect investors and ensure fair and efficient markets. It oversees activities on the Ghana Stock Exchange and ensures compliance with financial regulations. Summary. Financial markets play a crucial role in the economy by facilitating the efficient allocation of resources, providing liquidity, enabling price discovery, and offering mechanisms for risk management. Understanding the structure and functions of these markets, along with the roles of various participants, is essential for navigating the financial landscape. By examining specific examples related to Ghana, we can see how these concepts apply in a real-world context, highlighting the importance of financial markets in economic development and growth. Financial markets are complex and dynamic, but with a solid understanding of their fundamentals, investors and financial professionals can make informed decisions that contribute to personal and national economic success. Recording stopped.